Today, we're taking a deep dive into Tatva Chintan Pharma Chem. Now, you've probably never heard of them, but I guarantee their products are closer than you think. They could be in your car, in your medicine, and even helping to clean the very air you're breathing. So let me start with a question for you. What on earth could electric vehicles, life-saving drugs, and cleaner air possibly have in common? They seem like they're from totally different worlds, right? But there's a really fascinating thread that ties them all together. Well, the answer is they all depend on the work of high-tech specialty chemical companies. These are the invisible, essential ingredients that make so much of our modern world possible. And that brings us right to Tatva Chintan, the company we're unpacking today. Okay, let's jump right in with the essentials. This first part is all about giving you the big picture, the most important things you need to know about Tatva Chintan from the get-go. So if you remember nothing else, remember these 5 things. First off, they make these super specialized chemicals that are absolutely critical for industries from medicine to green tech. Second, they're a global force, shipping their products all over the world. Third, they aren't just selling stuff. They are a leader in several of their main product lines. Fourth, a huge part of their identity is this focus on green chemistry, which is all about making things more sustainably. And finally, the recent financials show some really interesting trends that we're definitely going to need to dig into. We'll get to all of it. All right, next up, let's get to the core of the business. What does Tatva Chintan actually make? Because, understanding their products is the real key to figuring out their value. First, we have something called structure directing agents, or SDAs. I know, it sounds incredibly complex, but just think of them as master builders. They're used to create these synthetic materials called zeolites, which basically act like tiny microscopic sponges designed to trap nasty pollutants. And here's where it all comes together. Their biggest use is right inside the catalytic converter in your car. So every time you're driving, these little chemicals are hard at work, capturing harmful emissions before they hit the atmosphere and helping to make the air in our cities just a little bit cleaner. Next up are phase transfer catalysts, or PTCs. The absolute best way to think about these is as chemical matchmakers. They have this amazing ability to get two substances that normally wouldn't mix to, react with each other. And they make the whole process happen way faster. That kind of efficiency is absolutely crucial in industries like pharmaceuticals and agriculture. And their reach is just incredibly wide. We're talking about being used to make the active ingredients in our medicines, the agrochemicals that protect our food supply, and even in creating the flavors and fragrances in everyday products. This diversification is a really big deal for them. And finally, we've got 2 more buckets. PASC covers a bunch of different chemicals for pharma and agrochemical companies, but the one you really want to watch is ESS, which stands for electrolyte salts. These are critical components for energy storage, specifically for the supercapacitors in electric vehicles that give them that instant burst of power when you hit the accelerator. This chart is great because it shows us exactly where the money's coming from. As you can see, those SDAs, the emission control chemicals, are the biggest piece of the pie right now, at 41%. PASC and PTCs are obviously major contributors too. Now, you might look at that tiny 2% slice for electrolyte salts and think it's nothing, but with the whole world shifting to EVs, that little slice could have massive growth potential. So we know what they make and who they sell it to, but is it a good business? It's time to follow the money and take a hard look at their financial health. First, let's look at the top line. That's the company's total sales. And right away, you can see a dip from fiscal year 23 to 24. Now, the presentation doesn't really explain why, which immediately makes you curious as an analyst. Is this because of lower demand? Are they facing pricing pressure? That's definitely a question you'd want to dig into. And now for the bottom line, the actual profit they keep after paying all the bills. Whoa, the drop here is even sharper than the revenue decline. That's a pretty big clue that their profit margins have been squeezed. It could be because the cost of their raw materials went up, or maybe some other operational issues. Either way, it's impacting their ability to turn sales into actual profit. But here's where the story gets really compelling. A key way to understand a company's risk is to look at its debt. Tatva Chintan's debt-to-equity ratio is just 0.11. To put that in simple terms, that's incredibly low. It means they're not relying on borrowed money to grow their business. They're funding it themselves. That points to a really stable, conservative financial foundation, which is a huge plus. So they have this really solid financial footing. Let's see how that translates into their position in the global market. What's their competitive edge?
Man, this slide just tells such a powerful story. On the left, you see their global reach. They're shipping products to over 25 countries. And then on the right, look at that customer list. We're not talking that small companies here. These are giants like Merck, Bayer, and SRS. Having clients like that is a massive vote of confidence in your quality and reliability.
And get this, they're not just a player in the market. They are a leader. They're the second largest producer of SDAs in the entire world, a top producer of PTCs. And back in India, they're number one for those supercapacitor salts for EVs and for another product called Glimes. They've totally carved out these dominant positions in very specific high-tech niches. So how do they do it? Well, a huge part of their edge is their technology. They're one of only a few companies in the world that uses a process called electrolysis. It's a form of green chemistry that's way cleaner and reduces waste. But this isn't just about being good for the planet. It's also highly efficient, which is fantastic for the bottom line. All right, let's pull all these threads together into a final scorecard. We've looked at the products, the money, and their competitive position. So what does this all mean if you're thinking about them as an investment? So here's the bull case, the summary of all their big strengths. You've got a diverse range of products that are essential to modern life. You have a global business with blue-chip clients. They are leaders in niche markets that are tough for others to break into. Their finances are rock solid with very little debt, and their commitment to green tech really positions them well for the future. But a good analysis is never just about what's there. It's also about what isn't. Remember, an investor presentation is a marketing document. It's designed to show the company in its best light. So what's missing from the picture? This is essentially your homework. This presentation doesn't give us a breakdown of their raw material costs. It doesn't explicitly list out the key risks to the business. We don't have much background on the founders. And while they claim to be market leaders, you'd want to do your own deep dive on their competition. These are the gaps you need to fill. I'll leave you with this final thought. You know how during the gold rush, the people who really made a fortune were the ones selling the picks and shovels? Well, the question for you is this. In a world that's rushing towards greener technology and more complex chemistry, is Tatva Chintan the one supplying the essential picks and shovels for the next great industrial boom?